The United States, often recognized as the land of opportunities, harbors a secret role. It's also seen by some as the world's largest tax haven, an exclusive realm accessible only to powerful leaders and the mega-rich. Within this exclusive domain, fortunes are concealed, money is laundered, and the intricate maneuvering of global influence takes place, all shielded from the watchful eyes of public scrutiny. But how is this carefully managed? The answer lies in the strategic use of offshore businesses, skillfully navigating the intricate web of taxation. While unraveling the complexities of offshore businesses and tax evasion, one cannot ignore the infamous Panama Papers. In 2016, a colossal leak of documents from the Panamanian law firm Mossack Fonseca, orchestrated by an anonymous figure known as John Deo, exposed the inner workings of a vast network of offshore entities used by politicians, celebrities, and business magnates worldwide. We discovered the mechanisms that allow the rich to legally minimize their tax burdens, drawing on a global network of financial instruments and jurisdictions. It's a tale of legal loopholes, international finance, and the quest for maximizing wealth. Despite the scandal, there are many firms like Mossack Fonseca still in business all over the world, operating in the shadows of financial regulations. But how exactly do these offshore businesses operate, and what role do they play in tax evasion? We'll unravel the mysteries, from shell companies to tax havens, exploring hidden tactics and legal loopholes that shape the financial landscape. To minimize the taxes they pay, individuals and companies often choose locations with low or no corporate taxes. This strategy leads them to tax havens, also known as offshore financial centers, where secrecy is their main business. They employ shadow directors, meaning that someone else takes on the responsibility of conducting the business, ensuring that the actual owner's identity remains confidential. This practice allows individuals and companies to hide their businesses effectively. Tax havens can be found globally in independent countries like Panama, the Netherlands, and Malta, regions within countries such as the U.S. state of Delaware, and territories like the Cayman Islands, which play a pivotal role in enabling the establishment of shell companies. Tax havens have a significant impact, representing around 10% of the global economy, equivalent to over $10 trillion in tax revenue funneled through offshore companies. An offshore company is a legal entity established in a tax haven, and it typically exists only on paper, lacking full-time employees or physical offices. These are also known as shell companies. These entities exist solely in legal documentation. Shell companies serve various purposes, both legal and illegal. Legitimate uses include holding assets such as money, luxury homes, intellectual property, and businesses. However, their illicit role involves facilitating the movement of illicit money on a global scale. This is often fueled by differences in regulations, allowing the true owners of many shell companies to remain undisclosed in incorporation documents, contributing to their involvement in illegal financial activities such as money laundering and tax evasion. Here's a simple example to understand how the system really works. Imagine a scenario where a drug trafficker wants to hide his illegal money. He approaches firms like Mossack Fonseca with all the records, following his lawyer's advice, meets an agent in the Cayman Islands. The agent sets up a shell company with a dummy director, the company opens a bank account, and the trafficker deposits money into the bank account. After a certain period, when the trafficker decides to move the money to conceal the trail, he contacts the agent and opens another bank account in the name of another shell company, intending to transfer the money from shell company A to B, ensuring the amounts don't match. Here, the names of the true owners will never be exposed, as dummy directors do all the signing for them. When the trafficker wants to use the money, the agent devises a scheme. The second bank, where the money was transferred, lends it to the trafficker's brother, who owns a business. That way, it'll appear as a loan, making the money non-taxable. If questioned about the funds, you can demonstrate it as a borrowing. The whole thing looks like it's perfectly clean and perfectly okay. The scenario presented here is just one of the various methods that criminals use to launder money and avoid taxes, which exemplifies the intricate and continually changing nature of financial crime in a globalized world. Setting up a shell company may sound like a complex task involving legal intricacies, but in reality, it's often as simple as sending an email or making a phone call. Many people choose to hire experts for this job, paying professionals to manage the complexities on their behalf. There's a whole industry of offshore specialists, such as Mossack Fonseca, Appleby, and Asiatic, who are prepared to handle important tasks like making phone calls or drafting emails to set up a shell company. Creating a shell company involves following diverse rules across jurisdictions. Typically, you'll provide identification and address queries about money origin and business purposes. However, in practice, offshore specialists often overlook these questions. Shell companies come in diverse forms, leveraging distinct jurisdictions and legal frameworks. Common choices include companies and corporations situated in Delaware, the British Virgin Islands, the Bahamas, and Niue. Additionally, entities like trusts in Jersey and foundations in Panama play pivotal roles in this intricate landscape. Notably, trusts, particularly in Jersey, stand out as susceptible to abuse, utilizing ancient legal principles to avoid declaring or defining an owner. Trusts intricately divide ownership into the legal owner, controller, and beneficiary, creating a complex structure that confounds tax officials, law enforcement, and investigative journalists. To further obscure their operations, shell companies frequently utilize nominee directors, either individuals or firms paid to be listed on official documents. These nominees, commonly referred to as dummies, act as a shield, substituting the actual owner or owners of the shell company to avoid public disclosure. Despite their appearance on documents, nominees possess no genuine legal authority or control over the shell company. At the center of the complexities is the idea of the beneficial owner. This person or company is the real owner of a shell company, no matter how many nominee directors or subsidiary entities are placed between them and the shell company. Figuring out who the beneficial owner is can be like untangling a complicated web. Legal structures create layers that hide the true identity, making the secretive world of offshore finance even more puzzling. This complexity extends beyond the legal intricacies. Tax evasion remains a persistent challenge, fueled by a system where politicians, entrusted with the responsibility of upholding public interest, find themselves entangled with tax-avoiding elites. It's clear that Mossack Fonseca, along with their clients who were avoiding taxes, made a lot of money. However, financial institutions, banks, and Wall Street also profited greatly. It's impossible to grow a major business without the cooperation of banks. Banks play a vital role in creating a separation between the real owners of the money and the corporation nominee, granting control over it. The banks, accounting firms, and law firms are using all their resources to damage national treasuries by creating an economic system that benefits only the 1%. They are working to widen the gap between the 1% and the rest of the world. The banks played a major role in past economic collapses. To understand what happened in the 2008 crisis, watch this video, or discover the inner workings of scams in the Wolf of Wall Street by watching this video. Please give it a like as a small token of appreciation and subscribe to The Money Game to level up your financial game today.